Check, check, check. Mic check. All right, things look good here. Get some water. All right, looks like vocals look good. Let's go live. All right, all right, all right, all right. Good evening, everyone. I hope you've had a wonderful, restful day and a couple of things to show you today. For those of you who hadn't caught on, I was able to put in a request for a PA payout. I took the minimum out of $500 to do a test run here. So wanted to talk to you a little bit about that, give you some insight into that, and talk about weekly prep. So we're going to be here for a short period of time. So let's go ahead and get looking at the charts here. Okay, so we have a lighter week than last week. We had a lot of heavy hitting items in the previous week. And this week we've got Fed speakers, we've got relatively low economic impact items, and we do have a 10-year bond auction on Wednesday. And then Thursday we have unemployment claims and a 30-year bond auction. So those are going to be some of the biggest ones this week, followed by 10 a.m. Friday. So I like looking at these and identifying how I'll trade during this week. You can already tell that Wednesday, Thursday, Friday is where we're going to get the majority of our moves. So, yeah, Fed speakers, with the Fed speakers going on today, I don't know what you can really consider, but your normal macros will be of consideration during those first 2 days. We're going to take a look at dollar, and we're going to take a look at some items and how we can frame a dollar this week in hopes that we can find out some level of movement here. Let me get rid of some of these fibs here that I was messing around with. Okay, so let's get rid of some of these other buy-side liquidities. We have mitigation blocks there, yes, but ultimately this high here is what we've been looking for with buy-side liquidity on a monthly level. I'll go down to the lower time frames, but we can kind of see how we failed to take out this, what I would have considered to be in this range a possible inversion fair value gap. Ideally, when we saw this go up and go down, we would have seen immediate reaction at that, and we actually did, but dollar kept on rising. It blew through, closed above, and now has come back into this range, and there's trading done within that range as well. So and let me do one thing. When we go down to the lower time frames for dollar, we'll be able to see a little bit easier on what we've been looking for. So previous weeks, we see that we traded down into this buy-side imbalance, and we imbalanced all the way back up into a daily level up here. There's a daily liquidity void that I pointed out a few weeks ago. And we traded to that, came back down, rebalanced this imbalance completely, closed just beneath it, and now we're starting the week with a dollar moving high, slightly higher on the week. So in my mind, what's going to be really important this week, let me get rid of some of these other areas and values here so we can get a little bit more clear cut here. So let me get rid of these two. Okay. All right. So now you can see that we have this area on the dollar, and when we zoom in a little bit closer, I like to place a, I like to place a line here and kind of, let's see if I can somehow make this dotted line. There we go. So at around this midpoint here, I think this is going to be somewhere where the dollar can reach down to and then potentially head higher. We could see a wick down. In fact, that's what we would expect if we are expecting dollar to move higher. Now, one thing to note is that we see one rise, a second rise, a third rise could reach for this relative equal high on the weekly. I still think this is our draw on liquidity, and I think that we didn't close below the midpoint of this previous balanced price range. So on the monthly perspective, I think that that's good. I think that means we can see dollar rise again, and I will be looking for plays accordingly. But we are in the midst of this dealing range still, and we're still within the middle of this dealing range as well. So nothing super high probability here. Scalping is still my go-to for this week, at least until we see a major expansion higher on the dollar, aiming for relative equal highs. So we would want to see dollar go lower first, not close any lower than maybe the midpoint of this here, if possible, for that to come to fruition. On the daily chart, we had already mentioned that we were looking for this liquidity void to be traded to. It's traded to it not once, but twice, and it's left a relative equal high here now. So what does that mean? Well, that means we have buy side liquidity up here. And depending on what day we hit it, that could be our draw on liquidity for this week. We see the midpoint of this wick. We would want to see price trade down to no more than that segment there. And actually, let me show you one other thing. From this low to this high was a buy side imbalance, sell side inefficiency, right? So you can kind of see the midpoint of that is here. We barely traded just below that and jettisoned all the way back up to and that particular day. So what we want to see is if it fails this Costco encroachment, then dollar's more prone to aim for this sell side imbalance, as well as these relative equal highs up here as outstanding liquidity. So this relative equal high has already been displaced through. So now I'm looking to see if we get some form of mitigation on this here, which we did, and if we see expansion higher this week. LP Trades, good evening. Good to see you, LP. How are you doing, man? Or woman. I think you're a man, but I guess I shouldn't assume. Hope you're doing well. Thanks for coming on. We just got done looking at dollar, relative equals highs up here, relative equal highs up here. An FOMC rate, which has remained still. So a handful of things that could cause dollar to rise. And if there's any sort of weirdness that goes on with the outstanding global, impending global economy, well, we will be ready for that. So that's enough for the dollar for now. We know we're aiming upwards on dollar. We know that there's very few economic events until Wednesday, Thursday, Friday this week. So we know that that's going to be where most of our trading is going to be done. So let's take a look over at NASDAQ as we enter the new month. So this is the NASDAQ chart. As we enter the new month, we see that we've traded down below the previous all-time high. We created a new all-time high, short-term high up here. And now we've seen that in the month of May, we have quite a rise in the month of May, leading to the very low. So remember, we've led to and reached to the low of this block here. So I think that we have potential for us to head higher, but on the lower time frames, there might be some seesawing downwards first before we head higher. On the monthly, we see we're right at that level where we see the previous 2 months ago's low. So you're going to want to pay attention to what it does at the midpoint of this wick. We've seen it trade all the way down through. So midpoint of this whole previous month as well is going to be of interest. So what does that look like? So we kind of see we've traded above so far, above the equilibrium of the previous week. So we're in a premium from the weekly perspective, but let's drill down further and see what that looks like. So far, we're still inside the previous week's candle, or previous month's candle. Sorry, not week. So let's take a look at the weekly though, because the monthly, while it's not telling me like, hey, we're very bullish or anything like that. If dollar continues to rise, that would give us a sentiment in order to target this previous high here, which would then potentially serve as a mitigation block. LP Trades doing well, delivering pizzas right now. I'm a man. All right, great, good to know. You're delivering pizzas right now, dude. You're hustling. I love it. You have to respect anyone who's out there getting that green. So I've heard pizza delivery is a little dangerous, but hopefully you haven't encountered any sort of pizza delivery weirdness there. But yeah, let's take a look over at the weekly chart though. So same chart, just on the weekly. We see these orange lines. These are a weekly buy-side imbalance that we traded down to through, and then we traded back up in the previous weeks. So let's zoom in on those weeks here. So we have this entire range. This happens to be the 40-day high. This is the 20-day high, 40-day high, and there's a 20, 40, 60-day low here. So this low, very important, very, very important. We've actually also on the sell side, we've taken out a weekly sell side imbalance, buy side inefficiency. We haven't fully closed it yet, but we do see that it was closed from a trading perspective. You see that wick up closed that sell side imbalance. So if we were going to think about, hey, maybe this is a trade up to this up close candle before displacement lower, this is what I would then consider as a potential bearish order block on a weekly perspective, coupled with a high, low, higher high, displacement lower. And now we have this candle being a weekly bearish breaker. Okay, so that's what I'm kind of looking at to see if that occurs this week. That would mean we are looking for dollar to go higher and looking for indices to head lower. Can indices kind of front run what's going to happen in May, at the end of May, June, and July? So if you recall, I had mentioned on the previous streams that the Treasury has already chosen to buy back a lot of treasuries. So the bond yields are too high according to the Federal Treasury there. So in my mind, what does that mean? That means that they're going to increase liquidity. They're going to couple that with the banks that are failing right now. They're going to save those banks, and that's going to inevitably lead to indices, stocks, everything having a nice skyrocket effect, at least in the short term. So I am weary of that. I'm weary of going short, but if we do see displacement, like we do currently see on the weekly chart, we see that we've barely traded higher and then we're trading lower at the beginning of this week. So we've targeted the high of previous week now, and we're close to the open. We've targeted, so this this close of last week was 18,075. This low was 18,050. So we've already targeted the high and the close of the previous week. So we now have a question. Do we treat this segment here from the previous new week opening gap? And if I draw a swing grade template here, that midpoint there happens to be a 40-day IPTA, a previous 40-day IPTA low. It is no longer a 40-day IPTA low. It's a prior level there, which potentially could be referred to, it potentially could not, but it happens to be the consequent encroachment, or the mean threshold, or no, consequent encroachment, midpoint of that wick, right? Kevin Zhu, hello, long time no see. Kevin Zhu, nice haircut. Appreciate it. I don't love it, but it is what it is, my buddy. I'll let them cut my hair. So LP trades at this point, I don't think stocks will ever crash. They will at some point. They will, but I think that because this year is particularly a presidential election year, it's gonna be a rush in the months, especially July. July is gonna be a great month for stocks, and then I don't know. We'll see what happens when we get into August and then September, because we have elections in October and November. So I'm thinking maybe end of the year is when we might end up seeing some ricochets from all the money printing and treasury liquidity, especially if we see inflation continue to rise. So yeah, it's a really weird place that we're in right now for sure. Okay, so Kevin Zeus says, think I'm still bearish on indices and bullish on dollar, and we'll see on the fair value gap. Sure. What fair value gap? What time frame, Kevin? Want to get you all in the habit of telling what time frame you're seeing a particular pattern on, right? So either way, remember this consequent encroachment here. Keep an eye on that. If we close below that, that's going to be key. I'm going to do one thing here. I'm going to add a new week opening gap here before I make these old new weeks opening gaps. I like to make my old new week opening gaps gray so that I know which one's the most salient one. All right, so I need to go find that one though. Move it forward. All right, I'm gonna go mark that new week opening gap first, so that we have that on our charts. And I'm gonna just mark that on a separate chart here. You'll see those two black lines there is what I'm marking. The close of last week, 18027.75. And the opening of the new week candle, which was 18046.75. I like having those on my charts so I can refer to what's going to happen throughout the week. Kevin Zhu, weekly NASDAQ and daily fair value gap as well. Yeah, I mean, this whole fair value gap, this sell side imbalance has already been traded to the downside and then back to the upside with a little bit of closure remaining within this new week opening gap area. Last week I mentioned there are quite a handful of new week opening gaps within our history. 1, 2, 3, 4, 5. And then there's some above here, but I don't really need to refer to the ones up here anymore. Those are too high and old to be of relevance to me. So I really care about the most recent, like 1, 2, 3, 4, 5 or so new week opening gaps, because especially this volume imbalance here. This happens to be there on the weekly, but I want you to watch for this volume imbalance here, because that's one of the last imbalances that I see on this premium side. So if we do end up reaching for that, I would like to see how price reacts there from a weekly perspective. If dollar is rising and continues to rise, maybe we'll see a little dip. So this would be my thesis for the week. So on the weekly, we know that there's a consequent encroachment down here. So I think dollar has a chance to maybe head lower to have indices in the background. You see NASDAQ. NASDAQ could rise higher towards that weekly and daily volume imbalance there. I like that volume imbalance because it happens to be coupled with a old new week opening gap. I've been mentioning this for a couple weeks now. So if dollar heads down and reacts and holds at this consequent encroachment, that's gonna give me and I want to see really quick reaction here. I want to see firm reaction here for dollar, to the point where it's reaching, and I can see that clearly it's reaching at least for this liquidity void on the dollar So I'm framing my week in that the first 2 days we might be able to trade lower on dollar. Ideally, that would have been paired with price moving upwards on indices temporarily before heading south on indices. But if we do end up heading south on indices, at least on NASDAQ, the first target here is this volume imbalance. You can't see it really easily, but it's there. So this volume imbalance happens to be within a previous new week opening gap, right? And so you'll want to keep that on your charts as a potential draw on liquidity as we start to head lower and go from there. Okay. So let's go down to a daily chart now. All right, so on the daily chart, there we go. See a little bit more there. So on the daily chart, we have quite a bit here. And let me check one thing on the weekly. This weekly dotted line I no longer need to keep here. It was the equilibrium from this high to this low. That was our dealing range. For those that did not pay attention, from this high, which is the dealing range high for a weekly chart, to this low, you can see the 50% mark happens to be at that equilibrium point. So we're keeping this in mind that we're now in a premium and that we're seeking premium arrays, PD arrays. What is left for me from an imbalance perspective is this volume imbalance. So I want to see NASDAQ head up to this area before traveling lower. We don't have to because we're in this order block area. So this down close candle can serve as a bearish order block potentially. So we're going to have to wait and see what ends up showing out of this because we haven't quite broken an intermediate term low. I do need to go back and look because the ICT had two different definitions of an intermediate term low. So there are other ones where it's like there's another definition that's combined with a fair value gap. I need to go back and study to go back through the 2022 model to look for where he defined that. But Kevin, if we trade to that volume imbalance, I'm pretty sure we are bullish AF. If bearish, we should never trade to it. Maybe. I definitely have that volume imbalance is still within my areas of trades. It's within a optimal trade entry, actually. If I go from the ones there, it's right at a optimal trade entry level for me. So I am keeping it in my trades, and you don't have to keep that in your trades. That's okay. Not a big deal if you think it's going to be bullish there. I want you to trade with that in mind and then see how that differs. So that's, in my mind, that's how I'm framing it at least. So on the daily chart here, we see we started the week heading lower. We rose a little bit, but we started the week generally trading lower. On the daily chart, there is a dynamic fair value gap here that's outstanding. It is coupled with two down close candles on the daily chart. So usually, like, you start seeing a lot of down close candles on the way back up. This is where I'm starting to look for maybe a couple more down close candles, a third drive higher to close out the rest of this sell side imbalance, potentially wick up to this volume imbalance, and then I'd like to see displacement Wednesday, Thursday, Friday, targeting this short-term low down here. This is what I think we will be aiming for soon. I do want to see this liquidity purged first and traded too before we head lower. LP trades, Kevin, I don't know about that. The FVG created was weak as fuck. Wouldn't be surprised to see more premium / consolidation. Yeah, it really depends on how dollar decides to trade this week. We've already gotten past the really big announcement, which was May's FOMC statement, right? And the rest of this month, we've got typical inflation numbers, core PPI and CPI coming up in the middle of May, unemployment claims, more treasury currency reporting, And then in the following week, you've got FOMC minutes unemployment claims and U of M sentiment, followed by the end of the month. In the end of the month, you've got some CB consumer confidence, unemployment claims again, and core PCE, and that's personal consumption expenditures. So what are people paying for? What are all like the average Joe? What are they paying for, right? So this month is a little bit easier month. Generally, the month of May is bearish, and I will be looking for bearish movements in really specific times of this month. So, yeah, I think that that's going to be something really important for people to keep in mind, is that seasonally, this month of May, oftentimes it leads to a more, how do you say, bearish move, I would say, with the end of May starting a move into a more June consolidation. Okay, so May in general quite bearish, at least until the middle of May, or maybe like the third week of May, I would say. So that's what I'm going to be considering in the month of May as we get past this first week and start to travel lower. I would like to see us travel down into this dynamic buy side imbalance and head down and maybe touch this here before heading higher. So that's what I'm thinking. We head higher, we head lower to head higher, and then we drop out towards the latter part of the week. Just because that would then allow me to formulate on the lower time frames, especially the 4-hour time frame. You can kind of start to see there's one drive, two drives, three drives. I mean, maybe there's a fourth drive up there, but you can kind of see on the 4-hour chart how we had institutional order flow entry drill here, right? And we jettisoned above all of this relative equal high up here. So I do think we're going to go up to close up the rest of this daily sell side imbalance, buy side inefficiency here, and head a little bit higher than that. So, but do I think it's going to close up there? Probably not. I don't think so. I think it's going to treat this as a bearish order block and maybe trade to this imbalance because it's an old new week opening gap. But I could be wrong, and it could just rip from here. If you take a look at the highest time frames from a monthly perspective, you know, you didn't see very much here, but you're in a huge premium. So you can't really consider this down close candle to be a bullish order block until you see the month create in displacement and continue to create higher highs, right? So that's my thesis for the week. I think that if we trade lower, I think that I agree there's going to be some consolidation this week, but I do think that the latter part of the week is going to start the leg to head lower. So what I'm looking for now is I'm looking for us to create one more short-term low, trade higher early in the week, and then start a sell program. If we can wick up into this volume imbalance, I'd like for this volume imbalance to be rebalanced and then traded back down with a displacement below a short-term low that gets created on the 4-hour chart. Yeah. So that's what I'm thinking. I wanted to keep it short and sweet today. We're not going to go into the lower time frames because there's no real need to until you get more data during the week. So you're more than welcome to. Don't let me stop you from doing that. But we had a pretty awesome week last week, and yeah, we're able to trade. But unfortunately, I did get flagged on one of my trades because it was around PCE. So for those of you who are trading Apex, you just be aware that you need to be trading a very strict set of strategy, and you need to be trading like consistently with that strategy. Otherwise, if you trade around news, one, you probably shouldn't be trading around news if you're not used to it yet. But two, if you don't have your system in place yet, there's no way you can possibly consider that trade to be something that Apex accepts as a payout. So I will keep you posted on that. I'll see if they end up disregarding that payout request or not. But I think that they should be able to, I think they'll be able to pay me out. I'll just keep you posted. Probably won't hear about it until mid-month. So I will keep you posted on that. And we'll continue to trade and do a good job really maintaining discipline, maintaining risk management, and slowly but surely growing the account, right? So that's it on my side. You know what my plan is this week. If we are able to trade lower on the daily chart, this dynamic buy side imbalance, I fully anticipate us trading down into this segment here, and maybe we end up trading right around the equilibrium point and then heading higher briefly, or maybe we trade down to the old new week opening gap. There's a volume imbalance here, which recently got rebalanced, right? I want to make this very clear to you here. On the daily chart, there's a volume imbalance here that happens to be filled at the same spot as oops, what's going on here? It happens to be filled at the same spot as a previous new week opening gap. So we're closer, we're right in the middle right now, but if we do trade lower, I expect us to see an immediate rebalance. If we trade lower down to here, right beneath equilibrium, I expect us to see an immediate rebalance higher to create a fair value gap and leave that open until we reach this volume imbalance, or maybe at least the SIBI high. Then I'll start looking for premium discount or premium arrays, which we can then take short. LP trades, Apex not paying you. It's not that they're not paying me. This is the first time that I've had a trade that's too close to some of their rules in terms, like they have certain rules where you can't, you're not supposed to trade around news. You're not supposed to look for windfall trades during news. So one of my trades happened to be right around PCE. But I was able to provide proof of my strategy that I use consistently, almost every single trade. And so what happens is they provide you, and I'll show you this. So they provide you an email which identifies, and let me make sure I don't have any identifying information here. I'll just take a screenshot of this actually, so I can take just the salient part here and show you. So this is what you get when you take a trade that is outside of the average rules here. So you get a confirmation that that you've reached a payout request. There are some trades that were flagged, and news trading is prohibited. The news trade date and time in question was this date where I had traded near. So you need to provide a written explanation of your trading plan and systems with the rules explained. And you need to be able to show consistent trading plan traded in the day-to-day screenshots of all the trades meeting this criteria within 2 days before and 2 days after the news day in question. So you're asked to show you've traded with consistency. So if you're trading with Apex, you want to make sure you're tracking your trades. You are staying really stringent and very, very structured with how you trade, because that's going to help you when they ask you for trades which are a little bit too close to news for it to be on their books as something that is a legitimate trade. So with that, so yeah, I fully expect the trade to go through and become approved. It'll just take a few days for that to happen. So yeah, I think that's it. I don't see anything else yet. So that's something that I thought was hopefully helpful for all of you who are going to be taking payouts from performance accounts soon, and hopefully in the near future. I want you to make sure that this is going to help you stay consistent. This is going to help you provide and keep the evidence that when you are journaling your trades, that evidence is going to be crucial towards helping provide Apex the data it needs. Because what does Apex want to do? They want to show that they've got good, they want to fund traders who aren't gamblers. And let me show you this here, because this is something that Apex had sent a while back. But these are the type of traders that Apex wants to fund, right? Oops. They don't want to fund gamblers, lucky traders, windfall traders, scammers, or erratic traders. And they don't want to fund traders who put them at risk and trade without a system. This is really key here. You need to be able to trade with a system. You need to be able to have a solid strategy. You need to be able to not trade with a bunch of different strategies at different times. And you don't need to get rich quick, right? So these are the things that we don't want at Apex. So they want people that have entries, initial take profits, exits, initial stops, have a good trading system, good consistent size, and they want you to be a partner. So Apex wants you to have these qualities as a trader. And if you're constantly, if you're not consistent, then they're not going to want to support you over the long run. So, Robert Mathers, what's up, man? Good to see you. How are you doing? Where you caught me at the tail end of the, at this prep for next week. So, you'll have to watch through if you want to see where I'm thinking price is going to go this week. But what I have highlighted is where I think price is going to go. It's just a matter of how it gets there and different if-then statements. If price heads higher first, that would support and dollar heads higher as well or lower. I would like to see price head lower in general. But before we do that, I'd like for price to head higher. So good. Getting ready for next week. Good. Same here. Yeah, I think that we've got a really good week ahead of us. I hope that price will be a little bit smoother, a little bit less janky here. This week was tough. Monday, Tuesday, Wednesday, Thursday, Friday. It was a Monday, Tuesday, Wednesday, Thursday low of week, Friday high of week, weekly profile. Robert thinks we're going to the moon. NASDAQ 30,000. That would be incredible. I do think we're going to hit that in our lifetime. Especially since I see NASDAQ was, at the 10,000 mark back in 2020 before I started trading futures, right? I didn't start trading until, right around here. So right about here's where I started trading futures. So, seriously, like learning ICT and being able to trade ICT and learning ICT. So this was about, I think he was already through the 2022 model by this point is when I first found out about him. And so I didn't start studying the 2022 model until like maybe February or something like that. So this is all my ICT study time. And this is why it takes many years for you to see patterns, because while you'll see many patterns unfold over the course of your trading lifetime, it really only sits in until you've seen a few cycles. So, but yeah, I think that's it for today. I'm going to go finish dinner, and I'm going to, hopefully we got a couple. I ended up buying a few more, evaluation accounts just because I wanted to get a few more to start to trade copy. And so I'll have 2 more. That'll be 7 performance accounts soon, with a 150K that's on the way and another 150K, which I will attempt to full port at some point. If I can find a nice little setup there. So I wasn't able to full port that on Friday. I wanted to do a full port Fridays in celebration of us reaching 1,700 subscribers. So for those that are here, I appreciate you. And we reached 1,700 subscribers, so that's just incredible. I couldn't have imagined that I'd be here starting in August of last year. So thank you very much. I appreciate you being here, and I hope I continue to add value for you, right? Yeah, I mean, that's really it. I'll continue to read price as best I can and draw on liquidity as best I can. And I'll continue to hone my ICT skill sets as well. I hope you do as well. I learned a lot this weekend. I took a ton of notes and I learned a ton this weekend. So I hope you did as well. There were many things that I plugged over the weekend that I plan on incorporating into the new week. So Robert Matthews, if ICC sees you full porting, he will disown you as a student. Yeah, I think that it's not smart, but it is a strategy for someone who is, and I've said this multiple times, full porting is not a strategy. It is a gambler's way to risk. But the thing is, let's say you make, I don't know, let's say you make $2,000 a week, right? One 50K account is maybe, with the 80% discount, I think one 50K account's about $60, right? So that's risking around 3% of that $2,000 that you made that past week. So the way I see it is more so from a risk percentage perspective. It is that if that's within your risk, fine. But if you fail that and you just blow it, right, because you weren't entering on the right moves, or maybe price was kind of crazy when you tried to enter, I'm only entering full ports when I see a setup that's so crystal clear that I know, hey, me passing this thing in one day is more beneficial to me in the long run than it is for me to invest time on an evaluation account when I have 5 or 7 other performance accounts that could be making real money, right? So it's and you know, I'm at a point where I've been fortunate enough to be able to afford a handful of new evaluation accounts. I'm keeping all of my performance accounts, save for one. There was that one in the previous month that I blew, but I'm still keeping it at 5. I think I've got how many of these? 1, 2, 3, 4 150Ks, and then there'll be 3 50K accounts. So just slowly building them seems to be the most consistent way. And you can use the profits that you gain from your performance payouts to pay for more performance accounts. So with that, I think that's it, folks. Any questions before I go? Any questions or comments from the crowd here? Guess I can go back to the charts for a moment here. Any questions from y'all? I want to make sure that if there's any questions from you, I can help answer them before I sign off for today. Open forum for you. Open forum. What kind of questions do you have? It does look like we've got a handful of folks that are thinking we're going to go bearish, handful of folks thinking we're going to go bullish. In the short term, I do think we will be bearish overall this week, but who knows, man? I need to see this traded to first. Robert Mathers is just us two now. Might be, yeah. I see 8 people watching, so I know somebody's still here. But that's okay. If there's no questions, there's, you know, if something comes up later, ask me. Just let me know. I'm making use of this sale. There's they've extended the 80% off for another month, so I'm going to be making use of this to maybe garner just a handful, nothing too crazy. I think my limit this month is going to be maybe about $1,000 worth of performance accounts if I'm able to. The thing about the 250K accounts is they're not cheap. The 50K accounts lifetime fee is about $150, and like if you go to FAQ, PA costs, how much do I have to pay for my performance account? So if you look, I always pay for lifetime because I can keep the accounts for much longer. Where is the lifetime fee? Here we go. This is what I wanted. So you can kind of see here how the 150K accounts, they're basically $250,000. So you need to think about these when you start to pay for lifetime fees on performance accounts. You need to be really diligent about risking 0.5 to 2% maximum on those of the trailing drawdown on these accounts. Otherwise, you're just going to blow them really quickly. Yes, you could go for windfall trades, but it's so much. I just proved it as well. I took about 20 days to trade in order to make it to the 50K accounts trailing threshold plus $100 so I could take a $500 payout. That is because as you know, I have a 9-to-5 job. It's really difficult for me to trade. I only get to trade 2, maybe 3 days a week if I'm lucky. And if I don't have meetings during the times when setups occur, right? So there's a lot of things that really delay how quickly I can run it up. But as you've been able to see, I have been able to run it up, and I've been fortunate enough to be able to collect quite a nice nest egg that's waiting right now. My total profits, so we're in the month of in the month of May now. So across the various accounts, my total profit is, let me add these up here. It's about $9,099 here. So I'm doing okay there, but I know a lot of people are having trouble. So if you're having trouble, make sure you're asking questions and being curious. Let me help you if I can. Robert Mathers says, I did the math on the lifetime fees and other stuff and decided that putting my money into AMP would be better. Plus, it gives me the experience of managing an account with no resets. Yes, I love that. Robert Mathers, like, I think that for those that have the ability to put it into AMP futures, you don't need very much. I mean, I think it was AMP futures maintenance margin. So in AMP futures for micro, so NASDAQ costs a lot more. You can trade E-minis a lot quicker and with a lot less money than NASDAQ. You need like $1,700 just to meet the maintenance margin, let alone whatever margin occurs when you're day trading. So, Robert, I don't how much did you fund a AMP trading account with? Because I know that these micros, I mean, looking at the cost of that, it looks as if, you need at least like $3,000 or $4,000 there just to be able to trade 2 micros. Otherwise, you run the risk of getting margin called pretty quickly, I think. Right? I mean, unless I'm doing that math wrong. Because it looks like you need, from a solely maintenance margin perspective, for the micro E-mini S&P and the micro E-mini NASDAQ, it's much more cost effective to trade S&P micros than it is NASDAQ micros, right? So kind of curious what you do, Robert. I'm really interested in learning about what you do to fund an account like that. So, oh, that's if you hold overnight. Okay. I wonder how much margin you need to just trade then. I see. So trading one micro NASDAQ would you just need $100 there. Okay. That's interesting. That's actually not bad. Okay, that's good to know. When Robert, do you know when you get margin called then? Let's say you put on a position, you have $40 there, you put on a position. So AMP futures provides you with that much margin for one micro E-mini S&P 500? I'll need to look into that. That's really interesting. Okay, well, look at the day trading. Yeah, I see the day trading column there. Yeah. Really, really interesting. That's actually not too bad though. If you only need $100. Yeah. So maybe like once you take out $1,000, you'd be able to trade like one or two micro NASDAQs and run it up pretty easily, I think. 9K profit into AMP. Guarantee you comfortably trade 1 to 2 minis of NASDAQ. Yeah, I think that would give you enough margin there for sure. I'll look into that. Like my goal was to get to around 10 grand out and then start an AMP account. Maybe like start to the problem with like that is I'd have to use figure out what broker to use with AMP trading and then use switch all my stuff over to TradingView when I really like Rhythmic and NinjaTrader. So I'll have to look into that. Yeah. That's their trap. Too easy to get margin called. Yeah, I agree. This is awesome. Really, no, this is really helpful. Thank you, Robert. I appreciate you sharing that with us. So yeah, there you go, team. Somebody who trades with AMP futures is currently trading with AMP futures, sharing some of the details on how you might be able to trade with your own money too. So, oh, AMP uses Rhythmic. Okay, that's cool. Gotcha. So maybe I'll be able. I wonder if I can use it with the license that NinjaTrader or that Apex gave me. I'll have to see if I need to buy my own license or something like that. But should be able to use it, I imagine. But yeah, that's cool. I'm going to definitely check that out. Check that out soon. And we'll look forward to trading trading real money on real accounts. Once I get it off of the Apex site. The thing I like about Apex is the ability to trade copy multiple accounts on the prop firms. I do like that capability. I think that that's really interesting. And I don't know if you can do that with AMP futures or if you have to like create multiple different accounts in order to do that. But I like that you can trade up to 20 different accounts on Apex Trader Funding. That was going to be one of my next steps is when I got to the point, I'll slowly parlay up a bunch of performance accounts again, get back to 20, and then go from there. So that is one thing from a scale perspective. I think that is something that can be really nice to do because imagine you have 20 PA accounts and you only withdraw $500 every single time. If you're doing that across 20 accounts, that's 10 grand each withdrawal. So could you run up $500, $1,000 within a month across 20 accounts? Yes. The answer, absolutely yes. So when I get there, I'll definitely show that as well. I'll get back to trading and trade copying multiple accounts. Trading real money hits different. Robert says, no matter how disciplined I thought I was, drawdown feels completely different when you don't get to reset. You have to live with every mistake you make. Yes, that's why like making sure you're really good at risk management is going to be key. Like risk management is no joke when it's your own money. So, all right, team. It's about 8:55. Went a little bit later than I thought I would. So, Robert Mathers, thank you for that additional AMP futures insight. Really appreciate you. Kevin, Zoo, Johnny, you have children soon. No, maybe not for another year, year and a half, I would say. So I'm gonna really make use of this next year, year and a half, because once children come, I mean, doesn't matter what time you're trading, you know, child's throwing up or dying, you kind of have to take care of the kid, right? So we'll see. We'll see. But probably not for another year or two, Kevin. Do you have kids, Kevin? Is that what you're asking? Is it like are you having to trade with kids, Kevin? Or no kids on your side? Um, cool. Oh, no kids. Oh, Kevin, nice, nice, nice. Yeah, you've got a bright future ahead of you at 25 years old. Years young. Yeah. Keep up the work. And I think that's gonna be it for tonight's stream. Thank you all for joining again. I see he had 5 kids when he was 20. Yeah, he did. That dude was a beast. I would be so stressed if I had that many kids right now. All right, folks. I do need to get going so I can finish dinner and then get to work. I have to get some work done before tomorrow. But yeah, good luck this week, and we'll catch up with you soon, okay? Have a great Sunday. Get some good rest. Stay hydrated, and we'll catch up on Wednesday and Friday. Take care. See ya.